Hey guys, Jason here checking out silver, another inside bar on the daily. So far, a couple hours left in this candlestick. What's significant to me is this rejection from the EMA 12 again, and the current close has us sitting. If we were to close right here, we'd be sitting underneath our EMA 26 as well. So a lot of bearish pressure here. Inside bar showing a little bit of equilibrium. We'll take a look at what's happening on the sub time frames. But right now, it's all about can we get lower or higher highs on the daily time frame. We've got 1, 2, 3 days of lower highs, so that EMA 26 really causing the bulls a little bit of pain. Today's high 1794 is going to be resistance in the short term for us to get over top of, and if we pull back to the downside, that will be a lower high. More significantly on the 4-hour time frame, beyond 1794, we've got 1809, and I'm looking for support at 1740 on the daily. On the 4-hour time frame, there's that 4-hour downtrend, and it's almost a 4-hour equilibrium. And I hesitate to call it an equilibrium simply because this push to 1775 should have been more substantial and had us oscillating into that equilibrium balance. Instead, what I see is a weird head and shoulders pattern, and we have our high, our higher high, lower high, and that will prove out with a break of, well, normally the break would be the two necklines, but because this is an FOMC reaction, I'm going to go ahead and just mark it something like that. Something more natural, ignoring the volatility that we saw as a result of the FOMC reactions, because that was pretty much a non-event in the regular markets. So we'll treat this as a learning experience. Call us a head and shoulders with a arbitrarily placed neckline. A neckline is something that you can use to determine when the pattern is going to be considered executed, and if it does execute, then you expect more downside action. So we've got our high, our lower high, and that's really what matters on the 4-hour time frame. We've established that lower high at 1794. Now we're waiting to see if we can get a lower low underneath 1759. On the hourly time frame, battling it out here, this is where we might look for that hourly equilibrium, 1799, 1752, 1794, and we're in an hourly uptrend. So bulls need to maintain this, and they pretty much can't give it up. Well, I'm going to call this the higher low here. We've got our jump to 1794, a little bit of a bounce, support test, 1776. So if we go to the 5-minute time frame, there's that action. 1776, double bottom, triple bottom, and we've broken it by a couple pennies, but zone of resistance is more important than the decimal point. 5-minute uptrend. If we don't carry this through and 15-minute bulls get rejected from EMA 26, we'll look at losing or a support test of 1776. If that goes, 1766 is next. And then we look at resuming a hourly downtrend and going back to play out this 4-hour head and shoulders. That's it for today. I'm going to go back outside and play with some ducks and geese and keep working on some hutches and fencing.